European exporters are warning of a strong euro impact amidst the US tariffs. There is a sharp rise in euro that is over 9% this year to a 3-year high. And it is sounding alarm bell amongst the European companies, mainly the ones who are exporters. Firms like SAP, Porsche, HelloFresh all have warned investors that stronger euro is eroding competitiveness in the US market, which is their main export market, and that might significantly dent their earnings. The surge in euro is compounding the strain of recently imposed US tariffs, which began at 20% and were later reduced to 10% during the 90-day negotiation window. While many companies have hedged their currency swings in the shorter term, the prolonged strength in the euro could reduce revenues and profits as the dollar earnings lose value when converted back to euros. For example, SAP noted that a $0.01 move in the exchange rate cuts approximately 30 million from annual revenues. Despite hedging, CFOs across the board caution that 2026 could be tougher. As costs rise and demand wane, sectors like autos and tech are already underperforming broader European markets. Banks expect the euro to strengthen even further, supported by policy moves like Germany's 1 trillion euro stimulus. Investors are now reevaluating European equities and rising currency headwinds amongst the ongoing geopolitical uncertainty. Hello everyone, welcome back to our channel and welcome back to this video wherein we wanted to share with you as to why a stronger euro is making European exporters uneasy. The euro has surged more than 9% this year, recently touching the 3-year high of $1.157, its best performance against the dollar since 2017. This shift in currency strength is more than just macroeconomic curiosity. It's becoming a real operational challenge for European companies, mainly the European companies which are exporters to US market. Let's try and understand what the euro-dollar strength actually means. A stronger euro means that 1 euro buys more dollars. For US consumers, European goods become more expensive. For European exporters, their dollar-denominated revenue shrinks once converted back to euros. And this results in weaker price competitiveness and margin pressures abroad, especially in key markets like the US. Let's try and understand the impact that is already visible. For example, SAP says that every $0.01 increase in the euro-USD rate shares 30 million of the full year revenue. Similarly, Schneider Electric says that revenues may decline up to 1.25 billion due to currency effects. Similarly, HelloFresh has also revised its guidance and it shows 28 million lower operating profit if the euro-USD moves from $1.04 to $1.14. Tariffs introduced by the US earlier this year, initially at 20%, then reduced to 10% during the 90-day negotiation period, have only added to the pressure. Despite the hedging strategies, the companies are warning that the prolonged euro strength could weigh heavily on the 2026 forecast once the current hedges roll off. Now, let's also try and understand why the euro is rising. It is a combination of the subdued US growth expectations, geopolitical trade uncertainty, and confidence in Europe's fiscal stimulus, which includes Germany's almost 1 trillion euro package, and it has turned the sentiment in favor of the euro. Some banks now expect the euro to climb to $1.17 by the end of this year. In a global economy wherein the exchange rates can shift the earnings trajectory of multinationals, the strength of euro is becoming a strategic concern, not just a financial one. In conclusion, one can only ask as to how should investors and operators think about the currency exposure in an increasingly fragmented global market. That's all that we wanted to share with you in this particular video. Hope you've enjoyed this video. Do stay tuned in for more. Thanks.